All right, what's going on, guys? Good evening. Back with another banger. Let's get into it here, guys. Let's see what's going on around the market. How's everybody doing today? This fine evening, this fine-ass evening. What's going on, guys? Let's get the Bitcoin chart up on the screen. $90,132. Continually rejecting off the 30-day moving average, as we can see again and again and again and again and again. Are we going to finally drop to the downside out of this bear flag? I guess we'll find out, guys. I guess we'll find out. So the target would be right inside this golden pocket, somewhere between 69,000 and I don't know, 74,000. Somewhere inside of there would be the breakdown of the bear flag. Let's get into the chat. We only got the one super chat. Kev, what's going on, man? Thank you so much for the super sticker, my friend. Absolutely super fantastic. Only had one this morning too. Very, very slow with the super chats lately. But I've been here every day with y'all. DH says, I think it's likely that all institutions calling for a continuation of the bull have an angle because crypto bros all say we go down. Yeah, you're not wrong. You're not wrong. You know me, says. I'm a sissy bear chicken wuss. There you go. You gotta be one in this game, baby. Also says, hit the likes and subscribe on the way in. Yes, absolutely, guys. Crypto Minnow in the Heezy. What's going on? Crypto Jared, short-term downside really sucks, but I've always maintained that I'll be here for a minimum 4 years for what I'm trying to achieve. Until then, I'll kick it with all the awesome people in the Patreon. My dude, my guy, my brother from another mother. Make sure you hit the likes and subscribe on the way in, guys. We have 80 people watching. We have 35 likes. Not bad, guys, but we can do better. Let's kick it into high gear. Let's get to 100. Let's get to 100. We can do it. Isaac, my dude. 2 super chats. You counted wrong. Thank you so much, brother. I appreciate you, man. Absolutely. We got our second super chat of the stream. It's been a minute. Paul, good to see you, my friend. Good to see you, brother. D. Wellwood, pumping like it's hot. Pumping like it's hot. It's me, Mario. Good evening, Senor Rob. God is good. We are truly blessed. Everything will work out just fine. Yes, exactly. Everything's playing out exactly as God has planned it. So don't fight it. You can't stop the bum rush, my friends. Dave, what's up, man? Good to see you, brother. Rightly divided in the Heezy. What's Swoopa? Where you been, man? Good day, Rob and Crypto Fam. Never a dull moment in crypto. Can I get an amen to that? Rockhound, hey, Rob. Let's create some madness. Yeah, too hot to handle, too cold to hold. Yeah. The madness this Monday. Dig it. I got you for 3 minutes of playtime. Let's go, baby. Absolutely. All right, let's get into the news. We're caught up in the chat already. Let's see what's going on out there, guys.
Prominent founder makes unusual Bitcoin prediction ahead of the Fed decision. A drop to this level is possible. Let's dive into it. According to some analysis, Bitcoin is at risk of another sharp decline ahead of the critical Fed meeting this week. XYO co-founder Marcus Levin said, "It is not out of the question that Bitcoin price could fall to $50,000 amid deepening market fears." He's not wrong, guys. The Fed will announce whether it will cut interest rates on December 10th, which is the day after tomorrow. While interest rates cuts typically provide liquidity to markets supporting risk assets like cryptocurrencies, he believes the current market structure is insufficient to absorb this support. While Bitcoin is trading around 89,700, technical and sentiment indicators point to a deeper correction. He stated the fear and greed index has shifted to extreme fear. This increases the likelihood of a deeper correction. The expert noted that the first critical demand zone for Bitcoin at $82,000, followed by $78,000. However, he added that if buyers remain weak at these levels, the drop below $70,000 is possible. According to him, Levin, even a short-term drop below $50,000 is possible due to the low liquidity environment. In the options market, the picture is slightly different. Data shows that the largest short position in options expiring on December 26th is at $85,000, suggesting investors are not expecting significant short-term declines. TYMIO founder Georgy Verbitsky, he's my friend, Verbitsky, yes. However, stated that Bitcoin's technical outlook remains fragile, saying structurally, the uptrend has been broken. It's premature to rule out deeper pullbacks until Bitcoin establishes a strong hold above $100,000. According to Verbitsky, a retest of $70,000 is possible as long as it remains below $100,000, but a sustained break above that level will significantly reduce the downside risk. Now, if we go back over to my little Bitcoin chart, they're basically saying the same thing that I have been saying for days now. We have a bear flag in Bitcoin, right? And the breakdown is, in fact, right down here to $70,000. And you may ask, well, Rob, what is the significance of $70,000? Well, if you'll be quiet, I'll tell you, okay? That would be the previous cycle all-time high. Back here. Boom, right? 2021. So we could retest the previous cycle high in that scenario. Well, we are going to, in my opinion, right? So, which would bring us down. And here's the thing, guys, that could bring us down to this level, but we have this bottom here. That would still play out the head and shoulders pattern. We have the bear flag. A breakdown to this level would still put us deep down, would still give us the opportunity to rally back up, putting in, right? Let's say we break down, chop. We could still come up, put in that right shoulder, and boom, shakalaka, right? That's what I think is going to happen here. So we're going to see downside most likely, right? We're going to see this dump, Bitcoin, probably somewhere close to that $70,000 range, and close to this pocket anyways. That is where, personally, I will probably take some temporary positions. Only Patreon members will know what I'm doing. But I'm probably going to take some temporary positions at that point in some altcoins if we do come down here, so that I can cash out at the right shoulder, the peak of the right shoulder, right? So that's what I will be watching for. A nice little bold strategy, Cotton. Let's see if it works out for him, right? All right, let's see what's happening over on X. What's happening on X? Chat's quiet tonight. Holy smokes. What do we have? We only have 98 people watching. We have 44 likes. Let's get the likes up, guys. Smash it, whack it, crack it. Do what you got to do, boo-boo. All right, so SEC Chair Paul Atkins says all U.S. markets will be on-chain within 2 years.
Tokenization is the idea of using then smart contracts or tokens on-chain to be able to, that represent, say, an underlying security. And so then that tokenized security is a security and would be subject to SEC rules by law. But the idea is that if it's on-chain, on a blockchain, then there's much more transparency as to where it is. Right now, there's a bit of opacity as to who owns what, and where the company usually doesn't even know where its who its shareholders are, and where the shareholders reside, where the shares reside. So tokenization has the benefit of potentially having, instead of T+1 now, trade date +1 for clearance and settlement, the prospect of maybe T0 now, depending on the instrument. And we have to think about netting and all sorts of other things with respect to some instruments. But in principle, the idea of on-chain delivery versus payment and receipt versus payment, DVP, RVP on-chain, is a prospect of de-risking the markets, making them much more transparent and then sure as far as clearance and settlement, because it's always that's the gap between clearance and settlement and then delivery and payment is the real introduces risk into the system.
Do you expect this is where financial services is going? Are the major banks and the brokers out there today moving increasingly toward tokenization?
Oh, absolutely. And it's the way the world will be, here in maybe not even in 10 years, maybe even a lot less time, maybe a couple of years from now. So I think that all of this modernization of the markets, I think, is good. And the trouble that we've seen here over the past few years is that the SEC, unlike historically, it never was necessarily at the vanguard of pushing new innovations. It was always a little bit behind the market, of course. But here recently, it's been almost standing athwart the marketplace, and as it's as all these new innovations were coming about. So that's no more. We're actually embracing it, and I believe that we need to be embracing it to keep the United States at the forefront as far as cryptocurrencies and whatnot. There were really only 2 countries in the world here in the last few years that were working to make cryptocurrencies illegal, and that was communist China and the U.S. through the SEC. So that's changed. It's a new day now, and so we want to embrace this new technology.
So a little bit of a segue from that, guys, is this piece here, right? Just bear with me on this for a second. This piece here. SEC ends Ondo Finance probe, lifting a major cloud over the tokenization sector, which is what he was just talking about, right? The US SEC has officially closed its 2-year investigation into Ondo Finance, ending a long period of uncertainty for one of the most prominent players in the real-world asset tokenization. The decision arrived quietly, but immediately shifted market sentiment. Ondo jumped more than 5% on the announcement, reflecting investor relief after years of speculation about whether the company or its token would face enforcement action. The confidential probe began in October of 2023 under the Biden administration and centered on 2 core questions: whether Ondo's model for tokenizing assets such as U.S. Treasuries complied with existing securities laws, and whether the Ondo token itself should be treated as a security. Gary Gensler, cough, cough. These inquiries have hovered over the company for much of its rapid growth phase, shaping how institutions interpreted tokenization risk across the broader markets. Ondo maintained throughout the process that its structure aligned with investor protection standards, cooperating fully with the SEC as it responded to document requests and clarified how its tokenized financial products were built. This closure notice, delivered in late November 2024, I think they mean 2025 there, brought an end to the matter with no charges recommended and no further action planned. I wonder if the SEC under this new leadership will start to issue no action letters, because we know that in the past couple of chairs, they're like 8 years, they've like not given out any no action letters at all. I wonder if they'll start issuing them to crypto companies at this point. The outcome is being viewed as one of the clearest signals yet that the SEC is willing to differentiate between high-risk crypto products and regulated tokenized models designed around real-world assets. While the agency remains aggressive in other areas of digital finance, the clean exit for Ondo suggests that projects with legal rigor and transparent structures can operate without immediate threat of enforcement. Now, the timing is notable. Tokenization has become one of the fastest growing sectors in crypto, with demand for on-chain treasuries and yield-bearing products raising sharply throughout 2024 and 2025. The removal of Ondo's regulatory overhang is expected to strengthen institutional confidence in the space and accelerate competition among leading RWA platforms. With the investigation behind it, Ondo is shifting back towards long-term planning. The company recently submitted a detailed roadmap to the SEC outlining new ownership models for tokenized securities and advocating for broader U.S. access to tokenized stocks and ETFs on the BNB chain. The focus moving forward will be growing U.S. market share and increasing the availability of compliant tokenized assets for both retail and institutional users. For now, the message from the market is clear. Regulatory clarity is a catalyst. The SEC's decision doesn't just lift the cloud from Ondo, it reinforces the momentum behind the entire tokenized landscape at a time when traditional finance is increasingly exploring real-world assets on public blockchains. You'll love to see it, guys. This is very bullish for the future. If you ain't got it by now, you just ain't getting it, guys. I'm telling you. A little bit here from Crypto Chrome. Let's jump into one of his clips. Zebec Network update, the Stripe partnership shift. Let's go, baby.
Something just happened in the crypto industry, and almost nobody understands how big this actually is. And if you care about real Web3 adoption, this changes everything. A quiet partnership just dropped, one that connects crypto directly into one of the most powerful financial systems on Earth. Here's the moment everyone missed. Stripe just activated embedded wallet infrastructure through Privy, and Zebec Network is now plugging directly into those rails with real-time on-chain payroll, automated payouts, multi-chain wallets, and seamless cross-border payments, all flowing into Stripe's global ecosystem. But here's the part that shocks people. This moment actually traces back to 2011, when Elon Musk quietly invested in Stripe before most people even knew what the company was. That early fintech bet just collided with Web3's future. Think about what this unlocks.
Almost
Streaming
like he
payroll,
knew.
stablecoin settlements, debit cards, instant payments. Crypto becoming invisible, powering everyday transactions without users even realizing blockchain is behind it. And this isn't speculation. Zebec Network already runs real-time payroll for companies today, and now it connects to Stripe's scale, infrastructure, and global merchant network. Crypto Chrome is researching this right now, because a shift like this doesn't happen often, and what it sets up for the future, we're only seeing the first move.
I have a deeper dive video coming out tomorrow covering more about that, so you're not going to want to miss it. You're going to want every little bit of it, guys. Passenger says institutions are not going to allow to see their investments go lower. Wall Street now controls crypto. Let's go. Hugo, Blockchain Buzz, and the Thursday Max and Rule are my favorite additions to the Patreon. If you leave Rob's Patreon still hungry, that's your fault. Hey, and Hugo, here's the thing that I'd put forward to you, brother. Those two shows are just the tip of the iceberg on what we have coming. We have very big plans moving forward to grow things out. It's going to be fantastic. Bobby says, love the 2026 plan video. Looking forward to part 2. If anyone is looking for guidance, look no further. In Rob We Trust, join the Patreon. Thank you, brother, and God bless you. Yes, absolutely. Thank you so much. Yeah, guys, especially since right now the Patreon is 50% off for new Patreon members. So get over there, guys, before the deal ends. It is only a Christmas deal. We only do it once a year. Lock it in. Get over there while the getting is good. All right, so Morgan Stanley's Michael Wilson predicts U.S. bull market by 2026. Carlos, let's go. Absolutely, brother. Let's get it. Morgan Stanley's Michael Wilson predicts the U.S. stock bull market by 2026, citing improved corporate earnings and interest rate cuts. According to Blockbeat's news on December 8th, this forecast signals potential opportunities for consumer goods and small caps. The Russell 2000, baby, correlated with the total 2. Affecting broader investment strategies and risk asset behaviors, again, like your altcoins. Michael Wilson's prediction revolves around the broadening market dynamics beyond mega cap tech stocks, with a significant upgrade to consumer discretionary and small cap stocks. Current economic indicators such as earnings expectations and potential interest rate cuts point towards a stabilizing environment. Wilson poised I'm tongue-tied, that the U.S. Federal Reserve's policy decision will significantly influence this trajectory. Expected changes include lowered interest rates, which I think we have, a 93% chance of a rate cut this month, the day after tomorrow. And they're targeting, I think they're projecting 3 rate cuts next year so far. Wilson highlights key sectors such as financials and industrials as beneficiaries of this transition. This prediction, paired with the stable labor market, could generate new investment opportunities and broader earnings growth by 2026. The financial community is closely monitoring reactions to Wilson's analysis. Wilson's insights emphasize a favorable backdrop for equity investments, with notable anticipation surrounding the Federal Reserve's policy shift. The broader investment community is receptive. Oh my goodness. As a dovish policy could bolster this projected bull market. Did you know during early bull cycle, sectors like technology and consumer discretionary often lead growth, mirroring patterns forecasting for 2026 bullish scenario? We talked about this on the Patreon live stream earlier, guys. There is an argument to be made for a alt season in 2026. Kush, I know you're watching. BlackRock seeks SEC nod to launch a staked Ethereum ETF. In a bold push into on-chain yield exposure, BlackRock, the world's largest asset manager, has officially applied to list and trade shares of an investment vehicle tied to a staked Ethereum ETF. This is a game changer for Ethereum if this goes through, guys. A lot of institutional money is going to pour in to a spot Ethereum ETF that they can stake and gain, 5 to 7% yield. Are you kidding me? BlackRock submitted its S1 registration statement with the US SEC on Friday for its iShares staked Ethereum Trust Exchange Traded Fund, marking a key step in bringing staked exposure to investors. The S1 is part of the SEC's process for issuers to introduce investment vehicles like ETFs or ETPs, but does not guarantee approval. And the fund's listing exchange must still file a separate 19B-4 form. But I would say to you that there are other spot ETFs right now with staking available. So it's just a formality, in my opinion. The filing comes a couple of weeks after BlackRock filed the name registration with the state of Delaware for the staking Ethereum Trust ETF, signaling intent to file with the SEC soon. Unlike BlackRock's popular iShares Ethereum Trust Spot ETF, or ETHA, the staking Ethereum Trust ETF, which the company intends to list and trade on the NASDAQ exchange under the ticker ETHB, will track the performance of Ether and add rewards earned from the trust's staked ETH. Quote, the trust is a passive investment vehicle that does not seek a guaranteed return beyond tracking the price of Ethereum and staking some portion of the Ethereum it holds, which may vary from time to time, the S1 reads. BlackRock has previously sought the SEC to sign off on staking components of ETHA Though the commission had acknowledged applications as early as July, it continued to delay a formal decision. Notably, Grayscale Investments has already added a staking functionality to its previously greenlit spot ETH and mini ETH trusts, following the approval of the new generic listing standards for the commodities trust. As the SEC stance has shifted under the new chairman, Paul Atkins. However, BlackRock has decided to launch a completely new fund while others modify their existing vehicles. The ETH-A remains the largest of its kind, with around $16 billion in assets under management. Meanwhile, BlackRock manages the world's largest spot Bitcoin exchange-traded fund, the iShares Bitcoin Trust ETF, or IBIT. You absolutely love to see it, my friends. If you are not bullish, straight up, you're tripping. You're tripping. Let's get back into the chat. I'd buy that for $1. Absolutely. A little RoboCop for you. Pico's in the house. Don't miss our upcoming Christmas special. Check out our YouTube channel, Not Financially Advised, and enjoy. Actually, I'm going to bring it up right now before I get into this next piece, because we can, right? Because we can. Let me just find it here. Yes. Okay. So, guys, absolutely don't miss the Christmas special that's coming up. Go subscribe to Not Financially Advised. You know what I'm going to do? And also follow them on all their socials as well. We're going to put the link in the chat. So go over there, guys. The link's in the chat. Go subscribe. New episode is coming out, guys. You're going to absolutely love this show. It's got the shakes that'll make you quake. It's got the fries that'll cross your eyes, my friends. Absolutely fantastic. All right, let's get back over to... All right, what do we got? Kev says, the next 10 years in crypto will be crazy. Ride the upside, so hang on, people. Hell yeah, there she is, the one and only Gamma Goddess. Let's get this money, honey. Absolutely. All right, let's get into this. CNBC's full interview with White House National Economic Council Director Kevin Hassett. Let's get it, baby. The next SEC chair? Question mark?
To meet this week. And the White House National Economic Council Director is calling for a 25 basis point cut. Joining us now, the aforementioned White House National Economic Council Director, Kevin Hassett, who's, I don't know, it's growing. He's growing in size. And I think I need to call you Mr. Director now, just the anticipation of maybe even greater things for you in the future. You're at 78% now on some of the things. So, we're going to have a wide-ranging talk, Kevin, because it all... Oh, I just said I was going to call you Mr. Director, and then I called you Kevin. But you think about 3% inflation, affordability, should the Fed be cutting? I think Myron would like even more than 25 basis points. But we might have dissension on both sides. What do you think the Fed should be doing right now? Doing more than 25, or should it be a dovish cut instead of what people are predicting? People are predicting a hawkish cut, where they jawbone that maybe this is it.
Well, it looks to me like Chairman Powell has done a good job of herding the cats at the committee. That if you look at the comments that different committee members were making just a few weeks ago, that it looked like they're very evenly split about whether they should cut or not. And I think that Chairman Powell agrees with me on this one, that we should probably continue to get the rate down some, do so prudently with an eye on the data. And so I think that it's an example of, you're managing a committee. The committee was really in diverse opinions before, and it looks like Chairman Powell has done a good job of getting people to circle around the futures markets the right answer.
Well, how restrictive do you think the Fed is right now in terms of away from where it should be? How much would you, let's say you were in the job, what would you be looking forward to in addition to this cut, and then next year? How many more?
I hate to disappoint with the sort of counting of cuts, but I can say that what you need to do is watch the data. We've got a lot of missing data because of the government shutdowns. We're going to get really back-to-back jobs numbers pretty soon. And so, I think that the Fed chair's job is to watch the data and to adjust and to explain, why they're doing what they're doing. And so to say I'm going to do this over the next 6 months would be irresponsible, really. And I know you don't want me to be irresponsible. I mean, you do sometimes, but not
No,
right
I do. I do, and I'm not expecting to get a lot of answers about whether whether you are the president's pick or not. But when the president the betting markets went up to 80% after that meeting where you were standing there. I was watching, and you were standing.
Side, yeah.
You were standing there, and he said, "Yeah, we've got one in the room, a potential." And I've done your face because I was kind of like, and I was just wondering what were you thinking at the time? Wow, I got it, or wow, I'm embarrassed, or wow, I wish you wouldn't do this, or I'll just whatever the president wants to do, I'm okay with. What were you thinking when he said that?
First, I support the president 100%, and he's very, very good at playing the drama of things. The thing I got to say though is people are talking about it. I think the markets kind of have it wrong about how the president has a tough choice. If you look at it, Chris Waller is one of the best monetary theorists of the last generation. He's got papers in places like the Journal of Economic Theory that were really the path-breaking papers that showed us how to model monetary policy. Mickey Bowman's the best regulator on earth. I talk to her all the time when I'm trying to think about what about this, what about that, what happened to SVB. And Kevin Warsh is about the most experienced Fed person that there is. He was there during the financial crisis before. So the point is that the president doesn't have a tough choice. He's got a guaranteed good choice. And if I happen to be that choice, I'll be pleased to help him serve.
I want to get into the affordability thing eventually, but I want to get into it this way. We've had a couple of people defend you recently. Brad Gerstner, we just had Jeremy Siegel say you're not going to be a rubber stamp in terms of easy monetary policy, that you're an established economist that would make the right decisions, I guess, to raise. But it does, at 3% inflation, it is on everyone's mind right now because that's above target. It's much higher than what the Fed would like. And I want to talk about affordability because suddenly it's a buzzword. Look, 23% of these price increases happened under the Biden administration. Sure. Now, the president's been in for not even a year, but inflation is still too hot, and it's above where it was when he came in. So you would need to think about, as a Fed chief, whether cutting is the right move right now. And there's an article in the Journal today, advisors are urging the president to start acknowledging that people are hurting or that there's an affordability problem. He's been saying it's kind of like a Democratic talking point that doesn't exist. How should you be handling this? Because the mainstream media is going to play it up.
Sure.
The buck stops with who's.
If Trump comes out and says that, the Democrats will use that, and it'll be everywhere. Oh, Trump himself said that inflation is this. Of course he's not going to say that. He's not going to hand over a bat for the Democrats to beat him over the head with. Like, what are we talking about here?
In the White House, and even if it was Biden's problem, the president's getting blamed.
Right. Well, the way that in the end, with an eye on the horizon, that this problem gets fixed is that real wage growth goes up enough so that huge 23% hole that was dug by Joe Biden is a thing of the past because people have money in their pockets, enough money in their pockets to bring their real standard of living back up. The real standard of living in the U.S., the purchasing power of ordinary Americans has gone up by about $1,200 so far this year. If you look at the great data on Friday that said that real wages were up 2.5% over the last few months, that happens when you get positive supply in the economy, and that's what drives growth up and prices down. And so what you want to do is lock that kind of gain in where you're seeing real wages coming from positive supply shocks. And if you do that, then just as in the 90s when we had positive supply shocks from the computer, and Alan Greenspan was willing to sort of let the economy run a little bit hotter, we have an opportunity with AI and all the productivity that we're seeing to do so again, but to do so with a great deal of caution as you watch the inflation numbers go by. Because the one thing we know is that inflation hurts everybody in the economy. And you saw that in the last election. I'm sure the last election was very much an inflation election.
Kevin, nobody likes inflation, and I think part of this administration's plan to try and get affordability, really within more affordability, I should say, out there, is to lower mortgage rates, right? Have car loans come down. Part of that is the Fed lowering those interest rates. We have seen the 10-year Treasury jump up. It's not a spike, but 4.14 versus 4. On the expectation even that when the Fed is going to cut rates again, we think, To see the 10-year move higher, just as it did when the Fed originally cut 100 basis points, it does raise questions about how much control the Fed has over the longer end of the bond market, what that means for things like mortgage rates that are set off of the 10-year. We had Ed Yardeni on this morning, and he said he thinks it may be that the bond market is concerned that inflation is not under control at this point. What do you think?
Well, I think the bond market is still like much improved from the beginning of the year. It's fluctuating around a little bit now. I think in part that could be related to the uncertainty over what the Fed was going to do and signal in this meeting. The bottom line is that if we get inflation down with positive growth, like happened in the 90s because of the positive supply shocks, then there's plenty of room for the 10-year to go down. But that's going to require discipline and keeping a close eye on things. But absolutely, when you see real wage growth over the last 3 months of about 2.5%, that's a sign of we're in the midst of a positive supply shock, and that's really good news both for equity markets and for bond markets.
I just wondered, is this article accurate? Has some advisors been saying to the president, you got to recalibrate your response to before? And I can remember during the Biden administration, when the Biden administration would blame the feeling that the economy wasn't going well on the media. I used to say that's just patently absurd, but that's kind of what we're hearing now. That there's almost ignore the public's feelings about how they feel about the economy at your own peril. And I'm just wondering, did that ring true to the president, that maybe he needs to he's in the White House. He may not have caused it, but the buck stops with whoever's in the White House right now in terms of how people are feeling.
There's a huge amount of positive news that the president is going to be breaking this week about the economy. We've got a person who actually approached the studio with me, walked with me, who's tracking the openings, the groundbreakings for the new factories that are, in the trillions of dollars of announcements that the president's been making. And we're up to almost 30 of those that actually the groundbreakings have happened. And so there's a lot of positive news that's positive for people's jobs, for people's incomes, and for inflation. And President Trump is just going to go out there and remind people of that. But in the end, again, going back to the eye on the horizon, that President Trump's economic policies were profoundly popular just before COVID in his first term because he had $6,500 of income growth after the big tax cuts. And so right now we're going into next year where the typical person who's got no tax on tips, no tax on overtime is probably going to see an extra $1,600 to $2,000. A lot of that'll come as tax refunds in the beginning of the year. That kind of stuff is going to make it so that people are going to look at their wallets and say, oh, boy, this guy's really making me better off. And in the end, that's more important than any poll. The final thing I got to say is that we did look at a lot of those sentiment, the softer indicators over the last few weeks, and we found a pattern that I'm sure you guys could find a chart that would show, which is that consumer sentiment it tends to crater when there's a government shutdown. And so we have sort of back-to-back 4% quarters coming in, and then we got the government shutdown and all the chaos related to that. And the sentiment indicators went down, but the hard indicators really didn't. And that's a pattern that we've seen over and over again.
Kevin, the Democrats would say the shutdown was entirely about these subsidies, even though that's what they picked to shut down the government over, obviously. But you can't talk about inflation if you don't talk about healthcare and rising costs that are across the board in healthcare. What do you think? Not just Republicans. I don't know if it could ever be bipartisan, but what should the government be doing about these subsidies right now? Should there be, in good faith, bipartisan talks about extending these subsidies or not without guardrails? How do you think that's going to go? Because it all comes into the affordability discussion.
Well, the president and Republicans, brought forward two big policies in the Big Beautiful Bill. One, about $50 billion to rural hospitals, and then about $30 billion for cost sharing to help the people who might be affected by these increases that were really a Democratic policy because of the expiration of the extra COVID subsidies. And so the cost sharing stuff was thrown out by the parliamentarian, but it shows that there's room for negotiation about something that could be good for people. I mean, we obviously want lower healthcare costs, but also we got to get the fundamentals down. And don't forget that for 2 years in a row under President Trump, we were able to get the consumer price index for drug prices to go negative for the first time since World War II, because all of the hard work we did working with drug companies to make drugs cheaper for Americans. And you've seen how much hard work we're doing again on that. And I would expect that we're going to see another third year of a negative CPI because of that. And so we got to get the fundamentals right. And, you know, I'm going to see Senator Thune in the White House today. I'm sure there'll be some discussion about how we go forward with the healthcare debate up there on the Hill between now and Christmas.
Some other things are on President Trump's mind this morning. Kevin, just posting on Truth Social, there must be only one rule book if we're going to continue to lead in AI. We're beating all countries at this point in the race, but that won't last long. If we're going to have 50 states, many of them bad actors involved in rules and the approval process, there can be no doubt about this. AI will be destroyed in its infancy. I will be doing a one rule executive order this week. And you can't expect a company to get 50 approvals every time they want to do something. That will never work. Any comments on that,
yeah,
Mr. Director?
I've seen a draft of what the president's talking about. It's been a top priority for him to make sure that we win the AI race. And I think that the order that he's promising to sign this week, I guess he's reviewed something close to a final over the weekend, is something that's going to really help the AI companies understand what the rules of the game are. As you know, that there are some states that want to regulate these companies within an inch of their lives, and then when they make a misstep, fine the heck out of them, just so that the states that are going bankrupt because of their profligate governments can take some money from the AI companies and so on. And so that's a game that President Trump isn't going to allow people to play. And this executive order that he's promised to come out is going to make it clear that there's one set of rules for American companies in the U.S.
Hey, Kevin, one other question we've been batting around the table this morning was the president said just yesterday that he was going to be part of making the decision about this Netflix transaction with Warner Brothers. And at least the comment that we were making in the past is that the president, this president and presidents prior, I believe have never at least publicly declared their involvement in these decisions. They've historically been left to the antitrust department with inside of the Department of Justice. So how different is this, and how should we think about that?
Well, I don't think it's just rare for presidents to have opinions about big society-changing mergers. But in the end, the Justice Department is going to study things like the Herfindahl Index, the concentration in this industry, the amount of competition that is reduced because of this big merger, and what the responses of all the other companies that are playing in this space might be. That's going to be something that goes on for quite a while. And I think the president is just very interested in making sure that there's a lot of analysis to make sure that we make the right choice.
Do you think that there's more to it now, though, the relationship that a company can have with the president than in past administrations? I think that's what Andrew's alluded to. Is it different than it's been in the past? Do you think the influence that President Trump?
I haven't been inside any other administration than the Trump administration, but I could say something about the Trump administration is that it's about the most transparent administration I've seen in my lifetime.
That's what we agree with,
Kevin.
And so what the other guys were doing probably, is they weren't telling you. And so it's harder to sell. But Mr. Trump lets you know how he feels.
Nice. All right. Let's get back over to the Bitcoin chart. So yeah, guys, my projection. Boom, down here, scoop up. That's what I'm going to be doing. And then we'll have that right shoulder put in. And then we make our way down to the 200. So that's what I'll be watching for, guys. Listen, have yourselves an absolutely wonderful Monday night. It's a great day to have a great day. I'm going to chilling like a villain. I was going to chill like a villain, but that didn't rhyme. So I had to make it rhyme. All right, guys, make sure you hit the like and subscribe to the channel. Get over to the Patreon. Again, it's 50% off right now, guys. The value is absolutely astronomical. Free newsletters, all kinds of stuff, guys. We got the shakes that'll make you quake. Check it out. Link is down below. It's in the chat. It's in the pinned comments. It's everywhere you want to be. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.